Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York on Monday, 18th of April, 2016. And we're looking at the Dow Jones Industrial Average about 10 minutes after settlement, above 18,000 on the day, closing up 106 points at 18,004. The high today, 18,009. Low on the day is 17,848. So a tremendous move in the Dow. S&P also following suit, trading to 2086, up about 10, 11 points on the day. We'll certainly want to take a look at those, along with crude oil, which, although traded lower today, did not seem to have the impact that it had on global equities markets last night. What an incredible start to the week as we look at the Standard & Poor's E-mini trading at 2086. Now, this is a Japanese average chart, and I will convert it in a second to a candlestick chart, but that's why you're seeing this print of 2074. But I really want to take a look at the candles itself, and I did notice that we had wicks on both the upper level and bottom level, which means that it's traded above the prior midpoint as well as below the prior midpoint. That's what that tail signifies, and the fact that it's green means that it closed higher than the midpoint of the prior trading day. Of course, this is a daily candle, so it's referencing Friday. Now, we are right at a point where, as I've said over the last couple of weeks, my sense is that if we can take out this particular area about 2070, we don't really have any kind of real resistance till about 2080. We'll have to go ahead. Actually, let's do that now and convert this chart back so we can get a much truer picture of the opens and closes. So give me 1 second there. Now we've converted it. So now you can see this high up at around 2086. And so my sense is right now that this market will certainly take a stab at this level of 2110. We're not all that far away from it at this point. And I was hoping that we'd have a little bit of a down day to really factor in and get into the market here. Right now, we'll wait and see what happens tomorrow. Now, in terms of a big picture, let's go ahead and pull up another chart to get a much different sense of the market through a long-term wave count. So traders, this is what I'm talking about in terms of a much larger picture. These A, B, and C represent major waves, and the whole sense of what we're looking at is this market came in and went to a record or historical high. This is 2014, and had a tremendous sell-off. I believe that it was over 20%. It was really the first time we saw this kind of a dramatic sell-off. So that was our A. I believe that we had an extended B wave that took us up to these record tops the first time, and that would be labeled as our B, and then a long extended C, all the coming down to these recent lows just at around 18,000. Now, that being said, it could make a good case for the fact that we have weathered our correction in the market, and what we've been experiencing on a much shorter term or an interim count is a 1, 2, 3, 4, and we are in the throes of our final fifth wave, and all of this would be a subcount behind, of course, a major primary first wave, and that's what I'm excited about. I do believe, as I said, that we'll probably go and challenge these record tops. We might see the market come up and then have a correction after that, but I do believe that this market is headed to 2100 on the index. Incredibly interesting day in the crude oil market. As you can see, it appears as though the market's closing at around $40 a barrel. Now, we had tremendous moves in the market overseas last night, of course, as the announcement came out that they made really no headwind, traded to a low of about 37.5, 37.61. That's this low here. And the high was 40.24. That, of course, is this particular high right here. And as you can see, we closed right at around 40. So my sense is we have this one channel line in right here. And the market certainly, as it hit this bottom at 35, it did come up, no doubt about it. But we talked about this really over the Friday session as well as on Thursday, but these double dojis and then that followed by Friday's dramatic downturn in the market really told me that we had the potential to see some lower pricing, and it's really these two dojis that were kind of capped right in the center of this large green and large red candle. And then traders, lastly, there's absolutely a uncoupling or a disconnect between crude oil and U.S. equities. Overseas equities traded dramatically lower under the news that OPEC could not come to any kind of an agreement. However, U.S. markets shrugged it off. We had, as I said, the Dow back over 18,000. You can see the E-mini S&P right in here, tremendous upside day. And even though we've got a green candle, the only reason it's green is a relationship from that dramatically lower open in the morning to the fact that it closed above the open. But it is still trading well below Friday's close. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review.